broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, welcome to the webinar. Ron here. We'll take a look at the charts and the signals and show you where the buys and sells, what you know are and stops on your chart, so what you should be looking for. It was a real good intraday day today, but let's take a look at a long-term chart. Here's an S&P monthly chart. I like to look at this chart every once in a while because hey, people got 401ks and IRAs and long-term positions. So it's kind of nice to see what's going on overall. And AbleTrend really paints a nice picture here. What I like to see, and well, first of all, we're on a buy signal for 9 years now. I mean, it's pretty crazy, but that it is, that's what it is. So all those downturns and pullbacks in the last 9 years when people get nervous. Think about it. These are great places to buy more or to add to your position. Again, long-term positions we're talking about. Every time. Now, right here, it actually went under. But you can always get right back in right there when it gets right above the red dots. The point I'm making is every time it pulls back to support. Again, this is a monthly chart, long-term chart, for like retirement accounts and all, which most of us have. So it's good to look at, and you could see, boy, those are great places to add. What's interesting now, just zooming in a little closer, look how far above the AbleTrend support we are. We're about 250 points above. It's only gotten that place a couple times that far above support, and it was a pullback right after that, about a month later. So we'll see what happens. Certainly going to not even to think about selling, that's for sure at the moment, but could be a pullback longer term. And I'm just thinking, a couple of months from now, just going on historical. So just nice to look at. It's certainly not a prediction or most certainly not a time to do anything because the bars are still blue, and that's a good thing. Could go up to the moon, could go up another couple of hundred points easily because the bars are blue and everything, but it's just getting really stretched. That's the point. So we'll see what happens. But December is always a great month for the market, and certainly been good so far. Let's take a look at the intraday. Our favorite is the E-mini NASDAQ because it tends to be the smoothest market to day trade, as well as has enough volatility to get some nice trends. The ES is kind of flat and choppy, and Russell's a good one too. And the ES and YM, I find them to be very choppy and flat. And CL and GC are they're just wild. I mean, they're just crazy. Sometimes you get some nice trends, but who knows what's going to happen on those days. So we like the NQ. We find it works real well. And it was a real nice signal right at the open. However, I couldn't to be fair about it, I couldn't have taken that trade. And let's take a look at what it looks like if you're looking at it live. This is just my tick chart, and I just use a 3-9 as an overall view, but quite frankly, I don't really use it too much. But I just like to kind of get an overall view. Tick chart, I love the tick chart. So first trade of the day, boom, there we go. 5 minutes after the open, there was a Trump tweet there. But look at the size of that bar. That's a 25-point bar. And the longer the bar, the greater the chance of a pullback. So I'm going to just sit tight and wait for a shorter bar, a more normal-sized bar. And the next one actually is still too long. I mean, that's a 20-point bar. There we go. That's a 10-point bar. It's exactly what you're looking for. Obviously, triple confirmation. Blue bar, blue dot, blue 2-minute X, blue 3-minute, actually it's quadruple confirmation. There's the place you want to get in at the close of that bar, or really the open of the next bar. As soon as the next bar opens, every bar before it is final. It will never, ever change again. So you had just an absolutely perfect, screaming buy from AbleTrend because you had not only triple confirmation, you had quadruple, four times confirmation. All the indicators and algorithms just lined up perfectly, and They're all screaming at us to buy. So we obviously go long there, and we know what happens. Now you got two greens here because you're up a bunch of money, like 20 points. It's a $400 profit right here, right here. So you put the stop 1 point below. Normally the stop would be here, by the way. It would be at the previous lower blue dot. There's a blue dot in the middle of that X. It's hard to see it. We don't ever put the stops on the dots below the price. We put it at the previous, next lower level of dots. But this thing just took off like a rocket. Here's two more. So now the stop would be here, and we're going to move it from here to here because we want to get that stop closer. It kept on going higher. We're up 30 points at that point. That's $600. Kept on up. There's two more greens. So we're going to put the stop, again, 1 point lower than 1 point below the lower of the two greens. Two more. So we're going to just, the point is we want to just keep moving it up higher and higher, locking in a ton of profit. Eventually, because of the two greens here, we would be stopped out right about there. And that was 60. That was plus 60. Plus 60. That's 1,200. This is $20 for 1 point. So for one lot, that's a $1,200 winner right there. And just again, you have to be a robot and just follow the rules. There's no thinking involved. Because the more you or I or anybody thinks, the worse we're going to do. The more indicators you look at and charts you look at, the worse you're going to do. Don't go by feeling or thinking. Just trade the signals. They work. They're not going to stop working today because you or I are using them. They're working for 20 years, and especially the last 4 or 5 years now, doing the guidance charts and configuring it and making it better, because we always make it better every year. That's why we have the maintenance fee. We make it better. We update it and make it better every year. And it's just another great day. And you want to try not to miss these days because you don't get a whole lot of these. And boy, these clean up a lot of losing days. And that's a guarantee. There's going to be some. Now, there'll be small losing days because we always have stop losses in place. But you got to try and catch these days if you can. I wouldn't recommend the Bollinger Bands on the chart K. You can if you like. Again, like I just mentioned, the less indicators, the less charts, the better you'll do. However, you're certainly welcome to do that. You click on AN for analysis, drop down box, and put a check mark in Bollinger Bands and click Add, click OK. Zach, where would the stop loss go? Same places we've always suggested putting them for all these years. That hasn't changed. The stop starts at the 1 point below the bottom of the entry bar, which is right there. And then as the dots go higher, as I was just mentioning, they go at the second lower row of small blue dots. But once you're in profit, 8 to 10 points or more, and we were up 20, 30 points in a couple spots here, just put that, when you see two green bars in a row, like I was mentioning, put the stop 1 point below the bottom of the green bar. Simple as that. And just keep moving it higher and higher and higher. And that was a $1,200 winner for one lot, for every lot that you trade. Obvious no trade zone here. Look how it kept us out of this choppiness. Down, up, down. I mean, just kept us out of false signals, choppy markets. Love those no trade zones. They are the best. And then, of course, when you're looking at this live again, this is, you're looking for a triple confirmation trade. There it is. I mean, just absolutely perfect. You had nothing but red resistance for, half an hour or so. So, but you also had blue support. So let's see which way it's going to go. It goes lower. So we're going to short it on this actually quadruple confirmation. You had the 2 minute, 3 minute, 1 minute, and a red colored bar. Boy, it doesn't get any lower risk and higher profit potential than that. And of course, again, they'll be losing trades, but we got to stop losses in place. Nobody ever gets beat up. Now, You put your stop loss. If you can put your stop loss a little bit above the red dot, that's a better place. That's the best place to put it. The same way when we're going long, if you can put a little bit under the blue dot, that's the best place to put it. By far, it's the best. Because now you have another layer of protection above the price. You always want to try and put your stop loss a little above the red dot. The red dot is like an invisible wall that's going to block it from going higher. So just, if you have to go another, my point is, if normally if you'd put it, let's say 1 point under the red dot, just put it 1 point above. The more protection you can have between your stop and the price, the lower the risk. So this one worked out really, really nice, as you could see. I mean, it was a killer. Now your stop would be here, because that's the previous higher red dot, but you have two. See, here's a good example of what I meant. You've got two greens, so normally you'd put your stop 1 point like above it, like right there. Don't. Put it an extra point higher above the red dot, so this way you have a nice invisible wall of resistance, like a roadblock between your stop and the price. Just gives you more protection so that you don't hit your stop. Because so often the prices hit the red dots and stop. The same way they come back down to the blue dots and stop, like they did right in here 3 or 4 times. No. There's a good example of what I meant. Instead of putting your stop loss right there, which would be 1 point above the top of that, the 2 green bars, if you just put it just another point higher above the red dot, look at this, you don't get stopped out here. Look how the price went exactly to the red dot, bounced off it and went lower. I mean, that's downright scary how accurate that is, because we started those red dots 5 minutes before that even happened. That's some really valuable information, and that's what you get with AbleTrend. And then we're eventually stopped out right there. Why? Because your stop was 1 point above that red dot, a green bar, and right here you stopped out. But you're out at 40. We shorted it at 68. It's another 28 points. You're looking at another $580. On top of $1,200 that we were already winning. So you're looking at really big money here. I mean, this is a lot of money. This is really this is special. You're close to 2,000 in profit. I mean, you don't get a lot of days like that. Take advantage of this. Just again, trade the signals like you're a robot. Don't trade your emotions. Trade the signals. Okay, let's see if we get a sweet spot, because you say, well, when do I get back in again? Well, these are a sweet spot. Here's a sweet spot. That's a sweet spot. These are all sweet spots, and the sweet spot is a pullback back to the red dots, and the bars go from green to red. Notice stops at support, right? I mean, there's a classic sweet spot right here. Right in here. Look how the prices pull back up and they stop at the red dot. Okay, let's look at 1139 and see if we're going to get in, because the tick chart tells us if we're getting in. The tick chart gets in earlier than AbleTrend. So if the tick chart's already in, we'll go in. Right there, 1139, 1140, 1139. So we're going to be right in there. Stops go a little, again, point above the little red dots. There's 2 green, not really in profit. Yeah, you are in profit, like 10 points. So there's 2 green, so we'll put the stop 1 point higher. Let's see when we eventually get out. We're still in, we're still in, we're still in, we're still in. Now we got the stop here when the prices are there, because there's the red dot, there's the previous higher red dot. It's just the same, it's the same rules. It's almost monotonous, really. I mean, it's the same rules, very, I'm very consistent, as you can tell. I mean, it's the same webinar for years, just to make sure everybody knows the right way to use it. Finally, we're stopped out there. So we're out at 18, let's call it 20, because I like to make it worse than it actually is. We shorted it at 40, picked up another 20 points, which is $400 more. Now we're well over 2,000, about 2,200 for the day. But you're not going to catch everything perfect. I mean, that's if you're up 3/4 of that, a good piece of that, I think everybody would be pretty satisfied with that. No trade here because you don't have any X's. Don't have triple confirmation. I'm going to go long there, but keep in mind, it is 12:36 Eastern, and that's our dead zone. It's optional. certainly can trade that. But after a ridiculous move like that, up a couple thousand using AbleTrend and only about 5 trades at that point in 3 hours, wow, that's a great day. But it's optional if you want to trade. But either way, really a couple of break-even type trades. Maybe even lost a couple points. But once 2 come right in here, that's close enough. It's almost 2 Eastern, so we're going to take that trade. We're going to lose 5 points on that trade because we're stopped out right there. Actually, about 6 points. We're going to go short here. Stop's going to be right about in here, so we're going to lose 5 points there. So we give back about 100. Let's even call it 200. So now we're probably up about 2,000 for the day. Obviously not even going to think about going in on a long bar like that. It was a 40-point bar. I mean, that's nuts. However, that's valid to get in there. It's a much shorter bar, perfectly valid. I don't like the distance, how far away it is from the blue dots. And as you probably know by now, the further the price is above the blue dots, the greater the chance it's going to come back. But that's a valid trade. I'm not going to put my stop down here. Put the stop 1 point below the bottom of the blue bar because otherwise it would be like 30 points away. But we lost 5 or 6 points on that trade right there. We're going to get short. We're going to get long right there. I'm going to give back about 5 on that trade there. We're going to go long there. Triple confirmation. That's about a point to two. Let's call it 5-point loser. Sweet spot right there into the close, and that one worked out nice. And this is your 4 o'clock Eastern time, 1 o'clock Pacific close. We got back about 7 or 8 points on that trade. So overall, obviously just a great day. But actually been a good week. But you just have to be there. Then to be successful, you have to be there. You have to do it, and you have to be very robotic. Just follow the rules and the stops because they absolutely positively work. And I'll also guarantee that you'll absolutely positively have some losers too. So I tell it like it is both ways. Hope this was helpful. I'll always be glad to help. Let me know if I can help in any way. Thanks for being here, everyone, and have a good one.